Welcome to You and Your Money. Today's episode features Jonathan Matthews, Associate Vice President and Wealth Advisor at WHZ Strategic Wealth Advisors.
It's something that some people have heard of, some people are very familiar with. It's an approach that considers not just the financial returns of investments, but also the environmental, social, and governance practices of companies that you're investing in. Environmental criteria, it might include a company's carbon footprint or sustainability initiatives. Social factors could involve how a company treats its employees, the suppliers, and communities. And governance relates to things like executive pay, shareholder rights, and board diversity.
So it's really about putting your money where your values are, in a sense.
That's right. It allows investors to align their portfolios with their personal values and still pursue their financial goals. It's about making investment decisions that consider both traditional financial metrics and these additional ESG factors.
I've noticed that ESG investing has become quite politicized in recent years. Some people seem to view it as a purely ideological approach, while others see it as simply smart risk management. How do you navigate those different perspectives when talking to clients?
You're right that ESG investing has become a pretty hot topic. At WHZ, we try to cut through the noise and focus on what matters to each individual client. We believe that whether ESG funds are right for you is largely a personal decision that should align with your overall financial goals and values. It shouldn't be about politics. It's about helping clients build portfolios that reflect what's important to them while still working towards their financial objectives.
Let's talk about performance. One of the biggest questions investors have is whether they need to sacrifice returns when investing according to ESG principles. What does the data show?
That's a great question, Wayne. It's probably the most common question we get about ESG investing. The performance data is actually quite mixed. Some of the ESG funds have matched or even outperformed conventional investments, while others have lagged behind. It depends on market conditions and the individual fund strategies. I would say there's proponents and critics. The proponents suggest that considering ESG factors can lead to more informed investment decisions and better risk management. The idea is that companies with these strong ESG practices may be better positioned to avoid certain risks and capitalize on some emerging opportunities. On the other hand, the critics are concerned that prioritizing the values over returns could compromise financial outcomes. There's increasing evidence suggesting that integrating ESG criteria can complement rather than conflict with financial objectives.
So it's not necessarily an either-or proposition between doing good and doing well financially?
Exactly. Many investors are finding they can pursue both objectives. Important to note that, like any investment approach, ESG investing does involve trade-offs and careful consideration of your goals as an individual, your timeline, and even your risk tolerance, which you're willing to stomach during the ups and downs of the market.
All right, let's talk about the different types of ESG investments available: environmental, social, and governance investing. What options do investors have if they're interested in this approach?
There's a lot. There's actually quite a range of options now, Wayne. Most of the common ESG mutual funds and ETFs provide instant diversification across a lot of different companies that meet these certain ESG criteria. These funds might be focused more broadly across the market or even target specific sectors like clean energy or sustainable agriculture. There's also on the kind of fixed income side, ESG-focused bonds that are often maybe referred to as green bonds or social bonds, and they're fund-specific environmental or social projects typically. A lot of the larger portfolios, there's opportunities for direct investment in companies with strong ESG practices or even impact investing strategies that target specific social or environmental outcomes.
So, Jonathan, if I call you later today, how do you help me or one of your clients determine if ESG investing is right for me or for them?
So we've got a couple ways that we will evaluate that. We'll take into your goals, your long-term investment time horizon, kind of what your values are as an individual, what it means to you. If you are against some, social or for some social cause, there's opportunities to invest directly into certain companies that may lean into that or shy away from it, for example. And so we take all of those into consideration when building out your portfolio and then would provide recommendations from there.
All right, let's shift gears a bit and talk about how ESG funds actually work in practice. How is that?
Sure. So in practice, ESG funds function much like traditional investment funds in terms of building diversified portfolios. They typically include a mix of stocks and bonds, and the proportions may vary depending on the fund's objectives and risk profile. The key difference is the selection of the criteria. The fund managers screen potential investments, and they might exclude certain industries altogether, like tobacco or fossil fuels, for example, or select companies that score well with ESG criteria.
How do you help clients determine if ESG investing is right for them?
That's a great question. There's significant variation in the fund approach to ESG investing, and the transparency has been an evolving challenge in this space. Most fund companies now provide pretty detailed information about their ESG methodology and the criteria. They also publish impact reports and show funds or how they're performing on various ESG metrics. So they're setting some sort of like benchmark standards, right? And regulatory bodies have been working to standardize these ESG disclosures to make it easier for investors to compare different options.
What about the costs? Are ESG funds typically more expensive than traditional funds?
Well, historically, ESG funds have tended to have a higher expense ratio than conventional funds. This was partly due to the additional research required to evaluate the ESG factors and the smaller size of many of the ESG funds. But ESG has been it's a growing trend. It's growing in popularity. We've seen expense ratios come down significantly. Today, while some ESGs do still sometimes carry a premium in price, many are pretty competitive with traditional funds, especially in the ETF space. With any investment, cost does matter. And so we help clients find options that provide ESG exposure the way that they want without the unnecessarily high fees.
Let's talk about the future of ESG investing. Where do you see this trend going in the coming years?
Well, from our perspective, we think it's going to continue to see growth and evolution in the space, Wayne. Investor interest in the ESG space, it does remain strong, particularly among the younger generation who will control an increasing share of investable assets going forward. We're seeing improvements in the data quality, like I mentioned, and the standardization there, which should address some of the current challenges around comparing different ESG approaches. One pretty interesting development is the growing focus on measuring actual impact rather than just screening out certain practices. So for example, in the past, they said, I don't want this, right? And they would tend to avoid that investment. Now investors are leaning into what is making a difference. Investors want to know how their investments are actually affecting environmental and social outcomes. I think we'll see ESG considerations become more integrated into mainstream investment analysis rather than just a separate category. Many investment professionals now kind of view this ESG factor as simply a part of the comprehensive risk management.
Jonathan, what about tax implications when it comes to ESG, environmental, social, and governance investing? Is it the same as any other investment?
I'd suggest a few steps, Wayne. So first, we clarify what matters most to you in terms of ESG priorities. Different funds focus on different aspects of ESG. Secondly, we'd consider how important ESG factors are relative to your own financial goals. So, for example, are you willing to accept potentially different performance outcomes to align with your values? And thirdly, do you, do your homework? That's what it comes down to. Work with a financial advisor who can help you evaluate the ESG funds beyond just the marketing.
And you talk about doing homework. What resources does WHZ offer for listeners who want to learn more about ESG investing or financial planning in general?
Well, we do have several blog posts about ESG investments on our website, Wayne. That's a good place to start. We also produce regular e-newsletters called Fearless Flyer that provides a wide variety of timely financial insights and resources. Most importantly, we do offer complimentary consultations where we can discuss individuals' specific situations and goals. Our team takes time to understand each person's unique needs and values before we make any recommendations. And our plan well, invest well, and live well process is designed to help clients build comprehensive financial strategies that give them confidence in their financial future, whether that includes ESG investing or other approaches.
Investments are subject to risk, including the loss of principal. Environmental, social, and governance, or ESG, criteria is based on a set of non-financial principles in addition to financial principles used to evaluate potential investments. The incorporation of non-financial principles such as ESG can factor heavily into the security selection process. The investment's ESG focus may limit investment options available to the investor. past performance is no guarantee of future results. For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Marrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.